People constantly say that I wish I have started investing back in 2020. Now, 2020 was one of the best years for the market. People made like millions of dollars. I don't really care what have you invested in. Stocks, crypto, real estate. I mean, if you just go back to that time, everything was rising simply because the Federal Reserve lowered the rates to 0%. So that access to the capital, the cheap money in the markets, led to the prices to actually skyrocket. Remember what happened to crypto? Every crypto you take a look at is rising in prices. Real estate prices rose by like 15% in a single year. Real estate prices usually rise by like 2 or 3%, and now you have them to increase by 15%. Take a look at the stock market. I think it rose by around 17%. But let me tell you something. 2020 was not the best year for the stock market, even though that it might seem like that. Now let's take a moment and compare 2020 to 2024. How good 2024 for the stock market was compared to 2020. And I can guarantee you that by the end of the video, the results are going to shock you. Now take a look at this. Now in 2020, the stock market or the S&P 500 in general has increased by around 16%. 16% might not seem like a lot, but if you actually compare 16% to the historical average, which is around 8 to 10%, it does double that amount, which makes it a great year. So if you actually had, let's say, $100,000 and you have thrown it into the S&P 500, that $100,000 by the end of the year would have turned into a little over $116,000. That's not, of course, a lot of money, but $16,000 in a single year investing $100,000 is actually not bad, to be honest. And you see, the reason I take the S&P 500 is because it represents the entire economy. If you take a look at individual stocks, there are stocks that grew by 100%, 200%, 300%. Some of them even grew by 1,000%. But when you want to invest, you want to minimize your risks. So by investing in the S&P 500, you're investing in the top 500 largest companies. If one of them or two of them, or even like 10% of those companies go down, the vast majority, which is over 80-90%, are going to increase. So overall, if the index has risen by 16%, that is a fantastic year. Some of the greatest companies don't even rise by that much in a single year, especially if you compare it to a traditional company such as Coca-Cola or GE or something like that. Now, let's take a moment, compare these numbers to 2024. Was 2024 as great as 2020? Now, if you take a look at the end of the year, if you check like January up until like the beginning of December, the index has grown by 27%. So if you actually had thrown $100,000 back in the beginning of the year, it would have increased to around $127,000. Do you see the difference? 2024 was far better for the stock market than 2020. And yet I see a lot of people say that I wish I have started investing in 2020. Wait a second. This year was far better for the market. The main index that has grown by 16% in 2020 has grown this year by 2024, and the year is not over yet. So let's try to answer the question, what exactly has happened that led the market to perform much better than it did in 2020 when interest rates were 0%? Because this year, if you take a look at the interest rates, there are around a little over, at the beginning of the year where they were around 5%, and right now there are something between 4.5 to 5%. So let's take a look at the historical average and compare it how great 2024 was compared to previous years. And if you take a look, there has been some years, for example, where the index has increased by over 40%, by over 30%. And this is fantastic. This is great. But I wouldn't actually compare it because, for example, if you see it this year, this is the aftermath of the crash of the Great Depression. When you have the economy crashing and the stock market tanking, and the next year or 2 years from now, the market recovers, that growth is artificial to a certain extent because it has simply recovered from the previous crisis. The exact same thing that you can see after the 2008. For example, the market has crashed substantially, probably by 50% at this point. And then next couple of years, the market has recovered, and that's why you have this growth. So If you have anything, for example, above 10%, it makes it a fantastic year. So you can see that the last couple of years has been great, even though that people still are nostalgic about 2020. So when you have 27%, you can clearly see that it actually puts it as one of the greatest years for the stock market. So if you're complaining that you missed your opportunity in 2020 and you haven't started investing and you kept your money safe for 2024, you can clearly see that you have missed this year a far greater opportunity than the opportunity of 2020. So let's answer the question why. What exactly has happened this year that made 2024 one of the greatest years for the stock market? Now, of course, the first most important reason is obviously inflation, because inflation plays a far more important role. If you go back, for example, to 2022, the market hasn't been doing great. And that's because the Federal Reserve increased the interest rates in order to beat inflation. Remember when inflation hit around 9%? 9% inflation is catastrophic for the markets and investors, because investors suddenly lose faith in the stock market and they know that the Fed will keep interest rates high in order to battle inflation. At the end of the day, there is nothing more important to the economy than the value of the currency that you have. So if the Fed suddenly sees, or any central bank in any country, whether it's the United States, China, Europe, Australia, when they see that the currency is losing its value, they will always increase the rate substantially. So when you have investors looking at something like this, when the interest rates are above 9%, what do you think is happening to them? They lose faith. But when the Fed done a substantially great job at lowering the rates, for example, over here, and brought it to around 3%, there is still a lot of work to be done because 3% is still high, but you can clearly see the trend that it has actually been going up to around 2%. It has been laying the ground for the central bank, and in this case, the Federal Reserve in the United States, in order to lower the interest rates. And one of the most important things that you have to pay attention is investors' expectations. This is what drives the market actually forward. You see, on one side, it seems like whatever happens, for example, in the market should reflect on the stock market. But usually it happens or works slightly differently. When you want to understand where the market is going to head to, you simply have to take a look at what investors will believe will happen, even if it didn't happen at all. So if investors are optimistic about the future, then you can expect the market to rise. And vice versa. If investors believe that the market is going to be pessimistic, then that is going to be the trend. And that's because their belief and their understanding and their expectations of the market is going to drive their investing decisions. So if everybody, for example, look at the inflation and they see that inflation has come down to less than 3%, and they believe that the Fed is going to lower interest rates, which means that there will be more access to the cheap capital, which means that the balance sheets of the companies are going to substantially improve, which means that their valuation will increase. So it's better for me as an investor to throw my money into the market today so that I will benefit from that growth 6 months from now, a year from now. And when they start buying, that increases the demand while supply stays the same, and suddenly the price of assets in the market, and in this case we are talking about the stocks, are going to rise. And that is why you always have to take a look at what drives the expectations of the investors. And in this case, lower inflation rate has made the markets to actually soar. So this has been one of the fundamental reasons why the market has done so great recently. Now, the second reason is obviously that the Fed actually cut the rates this year. Now, if you go back to September, the Federal Reserve has slashed interest rates by 0.5%. Now, that is a lot from one side, but if you compare 0.5% to something like 5.5%, it's not really that much. Especially if you go back to 2020 when interest rates were something between 0 to 0.25%. Compared to 2020, interest rates this year are substantially high. But that's not important. What is more important is that around November, the Fed slashed the rates by around 0.25%. What that created is that it set a trend that the Fed will keep lowering interest rates in order to prevent the US economy from falling into something like a recession. And again, we talked about the fact how important it is for the investors to have positive expectations. So if the Fed is lowering the rates to prevent a recession, what message does that send to investors? Again, buy now because soon there are going to be low interest rates and you will be able to take advantage out of that growth. So today's demand will drive prices higher and higher. Now, another reason that I believe has actually been behind such a substantial rise in the stock market is simply due to the fact that there are no other alternatives to investors' money other than the United States. Now, that sounds a bit, some people might not like that, but let's think about that for a moment. If you take a look at the global wealth, you'll find out that there is almost like $500 trillion worth of wealth. So that's a lot of wealth. There are a lot of rich people. Yes, that wealth is concentrated in the hands of a small percentage of people around the globe. But nonetheless, those people want their money to work for them. I mean, you can't simply keep trillions of dollars somewhere. I mean, if you have $1 billion, you want that $1 billion to get you 5, 7, 10% returns. At 10% on $1 billion is 10%. Now, I don't care where you live on this planet. You are going to have a very lavish lifestyle. And that's what rich people do. So, where would you invest that $1 billion? Let's take a look at the map. First of all, you will invest it in a country that is more advanced, that have a pretty advanced financial system, a better infrastructure, and you don't have much options. One option is obviously Europe. Now, Europe is a great place to invest your money, but when you take a look at the taxes, first of all, it makes it less attractive. But most importantly, you have a conflict in Ukraine, which is the middle of Europe. And that conflict has been escalating in 2024. And if this conflict gets out of hand, the entire continent could find itself in a total destruction. So if you have billions of dollars, you're not ready to risk that money. Yes, you might actually get a lower return in a different place, but it's far better to actually minimize your risks than risk your money to be actually entirely destroyed in Europe when you have a serious crisis, especially when we have so much worries about a nuclear war that could possibly happen. Now, I'm not going to go into those kind of speculations about what might actually happen, but we have a real crisis, and that crisis in Europe is actually driving investors out of Europe. Now, another option might be, for example, what do we have? All right, about Russia is an entirely different story. Let's take the United Kingdom. Now, the UK is a great option, but if you actually take a look at the numbers, you know that the British economy has been suffering. Now, if you go back, for example, 20 years ago, the average Brit was as rich as the average American. Now, fast forward to the end of 2024, the average American is twice richer than the average Brit. What do you think has happened to the Britain? Exactly. The economy has been stagnating and is slowly losing its status as even an advanced country. And soon, I wouldn't be surprised 20 years from now, places such as Poland will have a much better economy and a much better standard of living than the United Kingdom. So when you see such a trend that is going down, what are you going to do with your money? You don't want to keep your money invested in a country that is actually sliding into becoming a third world country. What are your other options? China. Yes, China is a great place to invest your money, but nonetheless, a lot of people are very afraid. Why? Because this is a non-democratic country. You have the government that is constantly getting into the business. But besides that, you have the economy that is suffering, that is not doing well. I'm not saying that the economy is entirely collapsing, but China right now is facing the most serious crisis in its entire history of growth that it had over the last 50 and 60 years. First of all, it has a real estate bubble that might actually pop up and will destroy the entire economy. And now that real estate crisis is much serious than the 2008 financial crisis that happened in the US. We have like 80 million empty houses. So you're not going to go and invest in real estate in China. I mean, if those 80 million houses are empty, why would you actually invest in another bubble? Now, the second thing is that to pay attention to, the stock market has been doing terribly. Why? Because the government has been intervening. Thirdly, the entire point of the CCP was simply the fact that it is actually letting the economy to grow so fast by around 6, 7, or 8% annually. But if you take a look at the GDP numbers, This year, they will not even hit 5%. So it's around 4.8, 4.9%. Maybe it might be overall 5%. They will somehow manipulate the numbers, but that's an entirely different story. So we can't really know for a fact what exactly is going to happen over here. Maybe this is the end of that astronomical growth of China. Now, maybe China will actually somehow overcome this trouble. I can't tell you for a fact. But what I can tell you is that investors are a bit skeptical and are not ready to invest their money over there. That is an entirely different problem. Where else are you going to invest your money? What do you have? Australia? I'm not even going to talk about that. Africa, well, most of these countries are not developed. Middle East is on fire again. You don't have much options over here. Well, when you come to the American continent, the only country that has an advanced financial system is Canada and the United States. And you can't compare Canada to the United States. Now, I'm not saying anything negative. I'm simply telling you the facts and how things actually work. So out of everything that's happening around the globe, suddenly you realize that investors are looking for a safe place where they can actually get a decent return. And that place is the United States. And that's why in 2023 and 2024, a lot of capital started flowing into the United States, especially when you have a person such as Donald Trump that won the presidency and wants to bring peace and stability into the world. I mean, was his message. I mean, I don't know what exactly he will do as a president, but that was his message. So when you have peace and stability and the United States wants to actually regain the status and move forward and destroy everything that would possibly stand on the way, for example, the US dollar stop being the global currency reserve. And that's why a lot of investors threw their money into the US stock market. And if you come to the United States, what are the other options that you have? I mean, think about that. You have government bonds, you have real estate, and you have the stock market. Of course, some people invest in crypto, but nonetheless, crypto is not yet that kind of an investment where investors are ready to put so much money into. Real estate is slightly overvalued, to be honest, to a certain extent, so you have to be very careful. Government bonds, as the Federal Reserve lowers interest rates, the returns on those government bonds are going to reduce substantially, so it makes them less attractive. And thirdly, the third most important option remains what? Exactly, the stock market. And that's why you have the stocks actually rising so much. But the third and most important reason, or this is probably the fourth already the reason, is that the next industrial revolution is taking place right in front of us, and that is artificial intelligence. Now, a lot of people compare artificial intelligence as the next stage in human evolution. Back in the days, we had, for example, the steam engine that that made transportation much faster, much easier, and that was an entire revolution. There wasn't a revolution where people from agricultural moved into the cities and started working into the factories. We had the internet revolution. I mean, just think about the fact that how internet changed the world. Think about that for a moment. That has been a revolution in human history. Think about how electricity has changed the world and made it much more advanced. It made our growth much faster. And now with artificial intelligence, people understand that they can take any task. Instead of hiring people, you can literally have an assistant for free or for, $20 a month. The AI is going to do that. And there are a lot of cognitive tasks that I see where AI is doing it much better than a human. And there are a lot, when you use, for example, things such as ChatGPT or other methods, other AI things out there, it blows your mind how fast this thing can do stuff that usually would take you at least hours of work, and suddenly they can do it substantially faster. And if you actually take a look at the market, you realize that everybody is trying to take advantage out of AI. And that revolution is primarily happening in the United States. Now, there are companies in different countries that are also growing their AI industries. You have Europe, you have Russia, you have China. But nonetheless, it's not as fast as it's happening in the United States. Most of the companies that are at the forefront of innovation in the AI are US companies, or at least are located in the United States. So you have Apple, Amazon, Microsoft, Alphabet, Tesla. All these companies are focused on AI. If you have actually watched the latest iPhone release, the entire point of Apple was that Apple Intelligence, and they were making the iPhone or the next generation of iPhones purely based on AI. What you have Amazon that is trying to become an AI powerhouse. You have Alphabet that has Google. They have introduced their Gemini and are also trying to beat ChatGPT at their game. You have Microsoft that are focusing on that. Tesla not just came out, but Elon Musk made it clear. Yes, Tesla sells cars, but you know what? Tesla is an AI robotic company. And that is why most of that revolution, I would say, is happening in the United States and is leading the growth. And if that growth is happening in the US, well, where do you think the capital and money is going to be? Exactly, the United States. Now, just to give you an example, for instance, NVIDIA is building the hardware for AI to be possible. So their chips are used in every AI company out there. Look at their stock. It has grown by around 200%. So a $100,000 investment in NVIDIA would have made you more money in such a short period of time than the last 5-10 years that you actually used in order to save up for this, to save up your first $100,000. And NVIDIA is not a small company. It's actually worth around $3.5 trillion. And based on what I see is happening, this company could substantially grow and become like $5 trillion, $10 trillion. Not tomorrow, of course, but this is one of the companies that led the S&P 500 to grow that much. It also grew so much, for example, back in last year in 2023, but this growth didn't happen in 2020, for example, even though that the company actually rose substantially. Now, another AI company is Palantir. Now, Palantir is not really known as an AI company, but their job is to analyze data. Use AI, gather data, and use the AI to analyze that data, and they primarily work with government contracts. And within this year alone, they have grown by 234%. One of the best investments you could possibly make for this year. I mean, people made millions of dollars, probably billions of dollars. So the company has grown from less than $50 billion to $150 billion this year. And Palantir is part of the S&P 500, which made it one of the best investments this year. Now, another company I would point out is Vistra. Vistra is not an AI company or has nothing to do with that, but it's an energy and power company. Now, another industry that is growing substantially and will continue to grow is energy, because in order to power AI, you need a lot of electricity, just like the way you power crypto, for example. Remember back in 2016, 17, and 2020 when there was every Bitcoin boom or every crypto boom, they went into the countries where electricity is cheap in order to create crypto farms to make sure to take advantage out of that crypto boom that happened. And now you have companies that are coming out that are making electricity much more cheaper by innovating different technologies that would make that accessible. So take a look at this company. It has grown by 340%. So anything related to AI and renewable energy are actually driving the innovation forward, and that mostly is happening in the US, and that's why the market is doing so great. So these are just a few examples that I have showed you. I could go on and give you much more examples. But nonetheless, the idea behind it is that the S&P 500 grew this year by 27%, which makes it one of the greatest investments in the market. I mean, imagine you are literally investing in one of the safest assets that you could possibly can, and it gets you 27%. So if you're actually nostalgic about 2020, listen, this year has been far better. And even take a look at Bitcoin. Back in 2020, Bitcoin probably crossed like $55,000 at its peak in 2021. This year, Bitcoin has reached like $98,000 at its peak, and maybe before the end years, it might cross the threshold of $100,000. So that leads me to ask myself a different question. What can we expect from 2025? This is far more important. Now, nobody can tell you for a fact what will happen. All we can do is take a look at the facts and the situation and the circumstances we have on the ground, and can make possible predictions about what might happen. What we can tell for a fact is that based on what's happening, the market will keep growing. Could there be a recession and a crash? Well, absolutely. It's also a possibility. And in my last video, I talked about that Warren Buffett most likely expects a crash because he's actually getting as much cash as possible. Warren Buffett right now is sitting on $325 billion. That's a lot of money. That's like 60 or 70% of his entire portfolio. You don't sit on that much cash if you actually don't expect any kind of a crisis. Last time something like that happened was prior to 2008, like in 2007. Because the market crashed at the end of 2007 and beginning of 2008, and Warren Buffett took advantage out of that. So regardless if the market actually crashes, I mean, there is a possibility because a lot of these assets are inflated because so much money came back to the United States. But another thing that actually calms me down is simply due to the fact that Trump won the presidency, and his presidency most likely is going to be about stabilizing the economy, paying off the debt, reducing the size of the government, stopping wars all across the globe. And all these things are pro-business, which means that there's a very good chance that the market, even in next year, is going to keep growing. So if you missed 2020, if you missed 2024, don't worry about that. There will still be more opportunities about the market. There are going to be every single year. Yes, there are some negative years, of course, but most of the years overall, if you take a look at the historical data, the markets are growing and there are always opportunities. And that's where you find all those rich people constantly investing in the stock market. And even when there is a crisis, when everything collapses, rich people either sell their investments before everything collapses, like for example that Warren Buffett is doing and has been doing, or they wait until that crisis actually is over and the markets recover and they keep growing after that. I hope you guys have enjoyed this video. Thanks guys for watching, and I will see you in the next one.